TFNN. Welcome to the May 12th Turnaround Tuesday edition of the Tom O'Brien Show. I'm your guest host, Steve Rhodes, filling in for Tom, and I am the morning host here, and I absolutely believe that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there had a terrific Tuesday. Let's make sure we do everything we can to have an extraordinary evening. Of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right. We make that one little 2x4 shift out there. It means we can find a gift in every set of circumstance that life is going to throw at us. I'm absolutely grateful for your presence here this afternoon. I'm here to serve you, so feel free to dial on in at 877-927-6648. Of course, internationally, you can pick up that phone as well. You can call us at 727-445-1044. This is Turnaround Tuesday. I'm Steve Rhodes. This is TFNN, and welcome to the show right now. We have the Dow. It closed out at 18,068. That was down 37 points. The S&P off 6. Closed out at 2,099. Composite off 17 points. She closed at 49.76. Russell 2000 off a little over, close to $3. Closing out at 12.33. Gold's up $9 right now, trading at 11.92. Silver's up 21 cents. Light sweet crude up $1.33. Leading the charge, the upside out here. We had Intercept Pharmaceuticals up $13, Receptos up $10, Humana up about $6 or $7, Tesla up $5. To the downside, with some volume, New Link Genetics, that was up 30%. Barrett Business Services, that was up 30% as well. Rackspace Holding down with down about $7 off 13% as well. Now, probably the question that everybody's asking themselves when you woke up, I called it Turnaround Tuesday. Now, I called it Turnaround Tuesday for the following reason. Even though the Dow finished off 37 points, do you realize that from the low this morning in the futures market to where we actually closed right now, it's a 150-point move off of the bottom? Now, you might be saying, if you're short the market, you might be saying, what the heck's going on here? If you're long the market, you might be saying, what the heck's going on? It is May the 12th, and you've seen a lot of jostling back and forth. You might be asking yourself, if I were you, I'd be asking myself this. In fact, I'm going to show you some patterns out here. You know, I'm doing a workshop this Thursday night. It's about human pattern recognition. But I'm going to show you a couple of patterns that exist out here in the market. And it's all about human pattern recognition, right? Because it's what buyers and sellers are doing. Do you realize this? Let me put this slide up on the... Do you think that it's unusual that we're experiencing this turmoil right here during the month of May? Let's go take a look at what the market has done over the course of the last 82 years. This slide that I've got up on my screen for you to take a look at, because what I need you to do is I need you to understand, how do you know where you're going unless you know where you've come from? Well, if we take a look at over the course of the last 82 years, this is a picture of the Dow. Here's your snapshot of the Dow. This is really just taking a look at from May 1st through May 18th. So that becomes from here to next Monday, if you will. And if we take a look at it, this volatility, and by volatility, I'm not referring to the volatility index, volatility of being up a few hundred points, down a few hundred points, just like we saw last Friday. Now, how is it that this chart, because if we take a look at last Friday's move, the actual 82-year average, is it because we have the jobs report that's released the first Friday in every month out here? You know, was that the anticipation of it? You know, look, here is the actual daily price movement inside of the Dow over 82 years, folks. Guess what that says? That the choppiness that we have inside the market, you should anticipate that. Now, wouldn't you like to know what's going to happen May 18th? The easiest way to do that is come on over to the homepage at TFNN.com and check out Mastering Probabilities, my daily newsletter service. But what I want you to do, we're going to stay focused right now on where we're at inside the market and the normal pattern that is out there. That's all that's going on. Everything that's taking place right now is nothing more than normal. If we go take a look at what's going on inside the ETFs, right? Normally, Tom starts with the SPYs out here, but I'm going to start with the Qs. Because as you know, if you are a technical trader, you take a look at volume inside the markets, you might say, as an example, the Qs today moved down with a volume of 31 million shares. What were they doing? The Qs were testing their most recent swing point out here from a few days ago, May the 6th. That had 42 million shares. In essence, was being tested with what? 31 million shares. There's not enough volume to go ahead and bust things down. Now, if you are a listener, if I'm not new to you and you've listened to me over the years, you know that as a pattern recognition master, expert, whatever we want to refer to ourselves as here, you know that I've identified a pattern inside the Qs that is totally unique and different with regard to the way that volume should be used out here. And I'm going to shift because, look, you have to recognize that from time to time, patterns are going to shift out here. Whether it's humans, where our patterns are going to change, and I can teach you how to change those patterns as well. I'll do that Thursday evening. But if we take a look at volume inside of the Qs, what the Qs do, and you've got to get your head wrapped around this, the Qs make bottoms with high volume, large volume out there. If you take a look at the last big bottom that we had here, it was October the 15th. Volume down there, 108 million shares. That was the last real significant bottom. If you go back further and take a look at the bottom as it was forming back here on April 15, 2014, 84 million shares down there. Big volume is how the bottoms are formed. Now, when we have light volume, you might hear folks here at TFNN complain about the low volume that we have in the market. Let me show you another tool with inside the QQQs. I haven't shared this. I don't think I've shared this with anyone other than newsletter subscribers, but I'm going to go ahead and share with you a pattern that exists out here inside the Qs. If you're watching us on Tiger TV here at TFNN, I hope that you are. Here is a chart of the QQQ ETF. The bottom portion of that chart is average volume. It is a 10-day moving average of volume. What I want you to notice is that when the Qs in the past, so they've got a habit of forming significant lows with volume out there. What they also have a habit of doing is if you take a look at volume and use a 10-day exponential moving average, not just actually, I didn't even use an exponential moving average, I just use a simple moving average inside of the QQQs for this chart out here. Take a look at where those tops form. Those tops, which we're talking about going back to March 2nd, we're talking about going into November 29th, we're taking a look at a top out here from September 3rd. Each of those tops were formed when the average volume, the 10-day average volume, got down into the level in about 21 million shares or so out here. And we can take a look at what's going on inside the markets right now. So if we take a look, if we go back just simply, because I want you to understand what's going on inside these markets, then it's going to make it a little bit easier for you to make your decisions about what it is that you should be doing. If we again go back to this chart here, our 82-year chart, sell in May, what has been done on average inside of the Dow, it's saying that we don't maybe make a top until, not right now. It says we've got to go out a bit. Maybe it is May 18th. Maybe it's not. You got to come over to the homepage at TFNN.com and check out Mastering Probability. But what I can tell you is you shouldn't really, at least based on the patterns that we're taking a look at with regard to volume, guess what? Volume actually isn't low enough right now. We don't have low enough volume to actually go ahead and make that next significant top between now and July, when the market should actually really careen down to somewhere. We'll take a look at that when we get to that stage. So there's two different ways to go ahead and use volume in your analysis for what's going on inside the markets. So with regard to the Qs, what do we know? They're trading with inside their TAS market profiles from 106 to the 110 area. Really, they could get up to the 111.16 area. We just have a sideways chop. If we go take a look at what's going on inside the IWM, the Russell 2000 out here. The Russell 2000, what did it do today? Well, the Russell 2000's already done all of its work to the downside. Its work to the downside I'm talking about is referring to the March 10th swing point. 32 million shares there. This thing was tested on 3 different occasions with volume. Couldn't bust it down. You can't bust it down. What do? You try to go bust it up. Today we saw the IWM had 33 million shares, really just a sideways move. Tried again to bust it to the downside. Really found support as a TAS market profile low out at the 121.29 area. It says that the IWM, if it can really clear this little downdraft session from April 30th, that high out there is 123.44. There were 72 million shares. If you can clear the top of that, 123.44 ought to get up to the 125.66 level. If we take a look at what's going on inside the SPYs, 113 million shares to the downside out here. Just traveling in a sideways consolidation in between the price of about 207 to about the 212 level out here. And quickly, we'll take a look at the diamonds before we go to break. The diamonds down with 36 cents, 4.7 million shares. No volume in its move to the downside. That is for sure. What it was doing was testing, it was testing the swing point from all the way back here on April 17th. That had 8.6 million shares. Today, 4.7 million. Guess what? We need some more light volume. If you're looking for the market to really move downside, you actually want to start seeing light volume over the course of the next several days out there. This is Steve Rhodes with TFNN. We'll be right back.